It's Thursday, 11th of December, 2025. Welcome back to your news update on Blip Brief, crisp, but almost everything updated every weekday. Okay, let's jump right in. We have to start with a really surprising reversal in the Indian economy.
Oh, yeah. What's up?
It's about fixed deposits.
Mm-hmm.
For the longest time, the engine for FD growth was, always the big metropolitan center.
Right, that's where Lemony was.
But now that whole dynamic has completely flipped. Rural areas are now accelerating past the big cities as the main growth engine.
And it's not a small shift either. Rural savings posted, what, a 10% increase? That's the fastest pace we've seen in 6 quarters.
So let's get into the why of it. Why are rural savers suddenly pouring money into FDs while the metros are, well, slowing down?
It's a fascinating tale of 2 different investor profiles, really. In rural areas, you've got rising incomes. That money is flowing into what they see as safe, stable instruments. FDs are the default.
So it's about stability there. What about the metros?
In the cities, it's about opportunity. The growth is losing momentum because those financially savvy investors are making a very conscious choice.
They're chasing higher yields.
Exactly. They're diverting funds into mutual funds, into equities, places where the risk-return profile just looks a lot more attractive right now.
And this micro shift, it seems to align perfectly with the broader macro outlook, especially what we're hearing from the Asian Development Bank.
Precisely. The ADB just lifted India's GDP forecast for the next fiscal year, FY26, to a very strong 7.2%.
And what's driving that confidence? What do they point to?
A few key policy measures. First, improved labor market flexibility.
Okay, from the labor law reforms.
Correct. Second, the continued simplification of GST. And third, and this is crucial, targeted credit support for exporters. All those things together are expected to drive that growth.
So growth is up, but on the monetary side, it looks like we're in for a period of calm.
It does. After that recent 25 basis point cut from the RBI, the consensus from Fitch and BMI is that the policy repo rate is going to stay unchanged at 5.25% right through FY27. Stability is the word.
Okay, let's pivot from domestic stability to some global action. The U.S. Federal Reserve just made a big move.
A big move, but with a very interesting signal. They cut their key interest rate for the 3rd time in a row.
Another 25 basis points.
Yes, but the commentary suggested they might pause now. They seem to think they've done enough to stabilize growth without, kicking off another round of inflation.
And the market reaction.
Instantaneous. Asian markets advanced pretty strongly, just following Wall Street's lead. That rate cut really lifted the mood, boosting tech and financial stocks everywhere.
Now, on global trade, we've got a bit of a split story. Good news on one front, but friction brewing on another.
Let's start with the good news. The U.S. Trade Representative is reporting the best ever offers from India on the proposed bilateral trade agreement.
So that's moving forward.
It seems so. The negotiators are calling it substantial progress. But then you have to contrast that with what's happening in Mexico.
The new tariffs.
Exactly. They just approved tariff increases that could hit 50%, targeting imports from China and other Asian nations, India included.
50% is not a small number. What are they targeting?
It's aimed right at goods like autos, textiles, and steel, and it's set to start in 2026. This is a clear move to protect their own domestic industries.
And meanwhile, China's trade surplus just keeps growing.
It's now topped the $1 trillion mark, and that's despite all the U.S. tariff pressure. They've just been incredibly successful at diversifying their export markets and moving into more advanced manufacturing.
Before we move on, just a quick geopolitical note. The U.S. seized an oil tanker, the Skipper.
Yes, off the Venezuelan coast. It's just a stark reminder that even with all these trade talks, maritime risks and energy sanctions are always there in the background.
Right. Okay, let's bring it back to India and some massive corporate action, starting in the IT sector.
Tata Consultancy Services, or TCS, just closed its largest ever acquisition.
That's the purchase of U.S.-based Coastal Cloud. Is this just about buying a bigger footprint, or is there more to it?
Oh, it's definitely strategic. This is a talent and technology buy. Coastal Cloud is a specialist in high-demand cloud transformation. TCS is buying expertise it would take them years to build.
So it's about moving up the value chain.
Precisely. And that hunger for capital is everywhere. Look at Adani Enterprises' rights issue.
Oversubscribed by 108%.
Which is just incredible. It shows there's tremendous investor confidence and a lot of capital just waiting to be deployed in the domestic market.
We saw that in the IPO market, too. The Corona Remedies IPO was oversubscribed, 137 times?
And you can't ignore the huge gains for early Micho backers after its blockbuster debut. There's just a huge appetite for growth opportunities right now.
Which is probably why we're seeing some very ambitious market forecasts.
Absolutely. Kodak Securities just set a nifty target for December 2026 that predicts a strong double-digit rise.
And their reasoning is tied to earnings growth.
Directly. They're forecasting earnings growth will top 17% in 2027. But their most interesting call is on the auto sector.
Mhm.
They're comparing India's current moment to China's big transition to mass car ownership 2 decades ago. The argument is that as incomes rise, we're on the cusp of a huge structural shift from two-wheelers to four-wheelers.
That's a fascinating long-term view.
Yeah.
In the short term, though, things were a bit more volatile, especially in commodities.
You mean silver. It saw the steepest single-day surge in nearly 2 months. Just a huge percentage spike.
Fueled by what? Global jitters?
A mix of global cues, inflation concerns, safe haven demand, and really robust domestic demand. Year-to-date, silver prices are now up over 114%.
Incredible. And quickly on currencies, the rupee closed a little weaker against the dollar.
Okay, let's shift to infrastructure, and we have to talk about the aviation mess.
Indigo. The government ordered them to implement a 10% capacity cut. That sounds drastic.
It does, but the actual operational impact is, well, manageable. It works out to about 70 flights a day.
So what's the real story here?
The real story is how they got here. The disruption was kicked off by the DGCA implementing new duty norms for pilots.
The pilot fatigue rules.
Those are the ones. And those new rules basically exposed how incredibly lean Indigo's operating model is. They had zero room for error. Any small disruption just cascaded through their whole system.
So the capacity cut is forcing them to build in a buffer.
That's exactly it.
Hmm.
Now, while aviation is pulling back, big tech is doubling down on India. Amazon just massively increased its investment pledge.
By $20 billion, right? Bringing the total to $35 billion by 2030.
And that cash is aimed at two things: winning the 10-minute quick commerce war and a huge expansion of their AI and AWS cloud infrastructure in the country.
And on the policy side, some good news for telcos.
Yes, TRAI has recommended slashing backhaul spectrum fees by up to 55%. That's a huge cost reduction for them, which should, in theory, translate to better service for you.
Finally, before our deep dive, India is making a big push for technological independence.
A very big push. The country is targeting complete indigenization of its high-performance computing systems by 2030. Basically building our own supercomputers.
But there's a bottleneck, isn't there?
There is. Intel's CEO, Lippi Tan, pointed it out. He said you can't have world-class semiconductor manufacturing without world-class talent.
And a lot of that top Indian chip design talent is currently working overseas.
Exactly. His point was that we need to create the right ecosystem to bring that talent back home. Without the human capital, the goal will be hard to reach.
That brings us to our final segment. The single biggest scientific innovation we found this week. And this could, and I mean this, revolutionize global agriculture by making crops self-fertilize.
Okay, let's pause on this because it's a huge deal. Industrial nitrogen fertilizer. Making it consumes about 1 to 2% of the world's entire energy supply every single year. It's incredibly energy intensive.
And then there's the environmental cost of runoff into waterways.
Right. So for a century, we've known that certain plants, like legumes, peas, beans, can do this naturally. They work with bacteria to pull nitrogen from the air.
But staple crops like wheat and corn can't. They have a kind of reject mechanism.
They do. And what scientists just figured out is that this reject mechanism is controlled by a tiny protein region that acts like a simple switch.
A genetic switch.
Essentially, yes. They found that by tweaking just 2 specific amino acids in the plant's defensive receptor, they could flip that switch from reject to welcome.
So they can get a crop like barley to start welcoming these nitrogen-fixing bacteria into its roots.
That's the breakthrough. They're giving non-legume crops the ability to basically produce their own fertilizer, pulling it right out of the atmosphere.
That's a fundamental shift away from an industrial process to a biological one. The implications are enormous.
I mean, if this can be scaled, it could slash the cost of food production, cut agriculture's carbon footprint, and completely change the game for food security globally. It's a huge leap forward.
It really is. Something to think about. And just before you go, a quick note. This deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.